Let's click on the old 𝗙𝗢𝗙𝗡𝗧. Is he in? Let's have a look. Sammy, my man, are you in, brother?
I think so. Can you hear me?
Mate, you sound loud. You sound loud and clear, dude. How's it going over there? All good?
Perfect. All good, mate. All good. Here in the Middle East. It's nice to be here. Thank you for having me on,
mate. How is Dubai?
Yeah, it's nice. It's nice. Just before we chat, I just want to make sure that your viewers can hear me fine, and then I'm gonna make this public on my channel, and I'm also gonna post it on my Telegram.
I'll just fire off some little bit of TA, and then we'll let you set up. All right. But yeah, as I was saying, Leggies, that's what I'm really looking at here in terms of the bulls. Like, if we do come up to here, I will look to short it. It will be a short interestance for me, because then you have the potential trade of actually just breaking back down to 14 again. Or if we do get to 14 and 1 the first go. But I'll say that this level here, Legends, it really is the line in the sand for the bulls. Obviously, 20K is important. I don't care what you say. 20K is always going to be important. It is literally the macro high of the previous bull market. This area here, if we do find a higher low here, which I think is probably unlikely, but if we do, we come up here, guys, I would look to short the first hit into this. Actually coincides with that level nicely as well. Come back down another higher low. Then you can actually get some trend lines drawn. And then you can say, okay, look, let's look for some longs potentially to 20K. But I think this scenario is probably unlikely. If we lose here, I think it's a quick move to $14,000, guys. And we might get it on stream. I've been vaping too much, Legends. Let me vape some more.
Yo,
but we might get it on
I've
stream.
just bought one myself. I'm live. So let me do a quick little thing here.
Yeah, talk, brother. Take control. If you share your screen, you can.
What's up, guys? How are you doing? Whoa, people are piling in. That was quick. Guys, in the chat, do me a favor. In my chat, let me know if you can hear me okay, see me fine. Oh, I don't think you can see anything at the moment. Yeah, Max, I'm not able to control anything in this live stream, by the way. As far as
what you can't? Yeah, you can. You should.
Yeah, no, that's a lie. That's a lie. One sec. No, I got this.
You can. Just share your screen at the bottom.
Yeah, let me see if I can.
Don't panic, brother. Yeah, I've got you. I've got you. There you go.
Oh, perfect. Yeah, here we are. Cool. Yeah. Well, what's up, guys? How we doing? Yeah, just live with Max today. Going to be doing some analysis of these markets. I don't even know what chart this is.
And then we're probably gonna talk about a lot of fundamentals as well, because like at the moment it's
this is
so
more
much
of a,
news and shit.
It's more of a talk around the fire kind of thing. But yeah, I need to see my live chat. My live chat isn't working. Oh wow, that was quick actually. Yeah, this is working. Guys, smash up the likes. StuTube already in the chat, smashing up the likes. Thank you very much. Shout out to you. Yeah. If we're vibing tonight, it's a 2 a.m. live stream for me here in the Middle East. So if we're vibing tonight, that's nice. Let's get.
Mate,
some
I've actually
been. Up over here.
I'll just tell you a little quick secret. I've actually been on calls since around 10 a.m. and I haven't actually left this room, basically. So like, wow. I've just been talking my shit off for about literally 15 hours. But it's good that you're here now, so you can take over a bit and we can hear your beautiful insight with your beautiful setup.
Well, do you know what, mate? I was actually supposed to... I recorded a video a few hours ago, and my fucking dumbass didn't mute my MacBook microphone, so there was a huge echo. I was like, I can't upload this. And I just dipped out. But yeah, let me... Yeah. Let me make up for that real quick. So, actually, I wasn't even like really particularly interested in analyzing Bitcoin itself, because... I mean, there's not a whole lot for me to say here. I mean, best case scenario that I outlined is, we could set a series of higher lows and higher highs, and this is kind of our best case scenario from what I'm seeing. But then that would just print, some sort of ascending channel, which would be pretty bad, because you were saying 20K is important. That could kind of take us up into 20 over the next week, and then we probably that's if we stay, kind of calm for a week, which is I think unlikely. But that's Bitcoin. That's not what I'm interested in. The video, and I'm gonna make a dedicated video on this. So
hey, tell us what you're interested in. I just want to hear your insight. I just want to hear your full insight, what you're interested in, what you're looking at.
So I'm gonna make a dedicated video on this instead of talking about this on live. But I'll tease it a little bit now. And it's basically it's to do with the dollar, guys. The main thing that I was kind of concerned about when I was looking at this is everyone's looking at this kind of weekly. And guys, I was calling this for a really long time, right? Like the dollar potentially dropping. I mean, I was kind of saying, we're in a lower high, lower low pattern, like up here at 112 or 111, 110. It was around here, 112. So this breakdown is absolutely great, but it just came at a horrible time because we've seen indices rally, right? Nasdaq and Bitcoin tied pretty much like 1-to-1. S&P 500, I mean, this analysis was beautiful. I was saying resistance here. If we get a second attempt, we have a much higher chance at breaking it, and that's exactly what we've done. Beautiful close on the Friday, heading up into this resistance at 4,100. So that's great. Indices are doing what we want to see in response to the dollar dropping.
Look at Dow Jones as well.
I'm sure they'd all be the same, to be fair.
Dow
Dow Jones just rocketing.
It's actually, sorry to cut you off, bro, but like if you draw a trend line from the top, right, from those 3 data points.
Okay, let me take a look at this later. Let me finish off. So with the dollar, what concerned me about this was we've already gotten what we wanted in terms of the dollar potentially dropping and then opening up, the skies for Bitcoin. But obviously, because of the FTX drama, there's just like a really bearish there's a big dark cloud over crypto right now. No one really wants to buy, particularly as we can see. And so what I don't like about this is if we look at where support might be on this chart, I've drawn this green box that stretches between 101 up to kind of 104, but you can definitely move this around a little bit. It doesn't really matter. The point is that we've dropped quite a bit already towards the support level, right? I mean, this weekly candle is heinous, by the way. This is one of the worst weekly candles I can see on this chart for the dollar. And if we just measure this from top to bottom, this weekly candle is already down. It's closed now, but it's down 4.4%. To get down to the top of my support box, let's be generous actually, and let's just say it's like to get down to this wick over here, that's only a 3.2% move now, right? So the bulk of this move has already happened, and Bitcoin hasn't seen any of it, right? Like the best argument you can make is that it maybe prevented Bitcoin from dropping down faster. That's the best conclusion we can pull out of this, and that's what I don't like, because what should have been very bullish hasn't really resulted in anything for Bitcoin. And as we know, things don't move up in a straight line or move down in a straight line forever, right? So even though I think the dollar is not in a good position, we have to expect bounces. We get bounces on nice, kind of smaller time frames. Like we're already on the daily, but we look at the 4 hour, for example, we get, bounces like this. And these are the kind of bounces that Bitcoin can get knocked a little bit, like it can shake Bitcoin up a little bit. And are we due for one? You know what I mean? Like we might very well be due for one, and even if we're not, the dollar can slide a little bit lower. But guys, let's be real. If we fall into this green box, I think it's quite fair to say, heading into 2023 or whatever it might be, that the dollar might see a bit of a rally again. Whether that means we sweep this high and go up to 180, 160, like some people are saying, or we could just rise up to 110 again, and again that would be enough, because when what should be a bullish environment isn't affecting Bitcoin in a bullish way, what happens when we get what's generally going to be a bearish environment, which is when the dollar is rising, right? When the dollar is rising, that's generally a bearish environment for Bitcoin. And we haven't been seeing any sunshine when we should be. Basically, this is another way of saying that we're not responding to bullish stuff. And we're in a bear market. I mean, you better believe that we might respond to the bearish stuff. And guys, as we're going along here, do me a favor and smash up the like so YouTube can push this notification thing out to the subscribers that want to see this, because we're only at about 300 viewers, and I know we can pump this up way higher. So if you are enjoying this so far, do me a favor and get them up. And I've also tagged MDX, so he's in the title in the description. You can go ahead and check him out. Yeah, so that's
stream. Show Sammy some respect. Hit the like button for this absolute legend. There you go, bro.
Thank you, bro. Thank you. So that's the dollar. I mean, we've already had the bulk of this move down. We're not going up yet. I mean, it's not looking great, to be honest. I mean, I tried to look for a silver lining. I mean, I guess there's the fear and greed index, reading of 22. I mean, that's okay, I guess, but I would have wanted it to be lower by now. It's not a whole lot that I can find that's like particularly great about this chart. The one thing I would like to see, although we have almost no chance of doing it now with 90 minutes left on this weekly candle, is if Bitcoin can manage to close above this swing low from June this year, or at least close near it. But at the moment, I mean, if we hold our current price, we're going to close about a solid kind of 6-7% below that low, and so we don't even have that going for us. I mean, I'd love to say that this is a fake out, and it definitely could be. There's not much saying that Bitcoin can't even spend 1, 2, 3, 4 weeks down here and then macro kind of get back up. And the only thing that I think can let Bitcoin do that is if there's continued strength across the indices markets, leading into the end of this year. But that's I mean, I don't, you know, I mean, fuck, at what point do you start saying that everything just looks shit on this chart? So yeah, that's yeah, that's where I'm at. I don't know, man. You tell me what you think.
To be honest, mate, I at the beginning of this video, I haven't really been doing much TA because everything I've kind of said, everything I've done right in my strategy has kind of just been preparing for this kind of like crash from 20. I said, look, if we lose 20, it's probably gonna be a quick move down. So I've got some cash. I've moved most of my crypto off exchanges anyway. So like because of all this FTX stuff and all this stuff with like crypto.com, I've moved quite a lot of I'll have a look at my Twitter. I actually did some tweets the other day, this morning. So like for me right now, it's just a black swan where I'm just like, look, I'm talking about more of this proof of reserve stuff, like the actual fundamental side of it, proof of reserves, and then more proof of solvency. I actually took off, I'll show you, 10 Bitcoin off crypto.com yesterday. And I was taking off crypto off exchanges because of the war thing. So like I kind of feel like I got ahead of it even before this happened. So for me, it's like this. I've got some cash. I don't really look at this market in terms of trading it. I want to be on my ledger. I want to be like off the exchanges, etc. There are some DEXs which I'm looking at as well. I'm kind of like, for right now, I'm kind of looking at the DEX space, thinking which DEXs are good. And I'm actually going to potentially build my own DEX as well. I've actually got a whole team ready to go into building my own decentralized exchange over the next few months. So that's the kind of things I'm thinking about. But in terms of the TA, if you look at most of these guys watch my videos, so they kind of know it, but I'm on your side as well. So maybe I'll give a little bit of context in terms of the Dixie, because I want to show you the Dow, bro. Oops, just did something there. So I think SP.
Can you check WhatsApp
I think
when you get a chance, by the way.
Is it not working? Is it what happened?
No.
I'll just do it.
Just between you and I, but when you get a chance.
Okay, yeah, I'll do it now. Just give me 1 second. Let me just do. I'll do the TA and I'll work it out in a second because I've got to click edit and shit. Dude, let me show you Dixie, okay? I mean, sorry, Dow Jones. So this is actually really, really good because Dow Jones is like top 7, and what Dow's done is actually broken out of this trend line, and it's actually broken out pretty well and got above this resistance. So this is kind of giving me a signal that I think SPX. And obviously, this is a great move off SPX from support. But I think SPX is probably going to go to either trend or even overshoot it and potentially come up to 4,400 points. So I think we could get here on SPX on this move. Doesn't mean it has to happen. I'm saying we could get resistance here and break down. But this here will create a lot of confidence in all markets because we know that if SPX is rising, we know that people are going to be looking to buy risk, okay? It's going to create that motion. You were exactly right on Dixie, bro. Your charts were, I couldn't say any better. Just exactly right. Lower highs coming into this flat bottom of support. For me, it's pretty much exactly the same as your charts. We've got here, whoopsie daisy, little squiggles. So if you go on the monthly, you can see here. I don't know if this is actually clear on your screen, but you can see here that this level here is very important. So we're looking at 1,000 points, basically 106. So you can see here, bang. This is just super the magnet right now, this support region here. And I've been saying on this channel that the same as you, bro. Like I thought that this dump in Dixie was going to correlate with Bitcoin going into a bear market rally. That's exactly what SPX has done. SPX in a bear market rally. It's in a bear market, low highs, lower lows. It's moving back up towards trend. That's a bear market rally. Bitcoin, like you said, could have been going up towards 28K right now. Could have held 20, moved up. But this to me is creating in a scenario where Bitcoin's probably wrong. The market's trading irrationally in comparison to what everything 100%. Else is happening here. So it's wrong in a way.
And this doesn't even affect Bitcoin. Like the FTX thing is an FTX thing. It's not a Bitcoin problem. So it's
not a fundamental problem, no.
Yeah.
So what I'm looking at here is that I'm all hands off. I'm like, look, the price can go down. I got some exchanges, got some cash. I think Bitcoin, when this cools off, the sentiment, because sentiment in crypto is hilarious. It's literally like a 14-year-old boy or girl. Like 1 minute they're happy, 1 minute they're crying. 1 minute they're happy, 1 minute they're crying. So that crypto is like the child, of sentiment. So, crypto right now, Bitcoin can be all, oh my God, it's over. But I'll tell you one thing. There's only 2 fucking buttons. If everyone clicks the red button, the only way they can go is green button. Okay, that's all they can do. It's like red button or green button. If everyone clicks the red button, you just exhaust the amount of sellers. Then you're left with hodlers and strong hands. Soon as we get a flip on this, like maybe 14 and up, and we do say we did something less 14, and then we just spiked up, Everything else is looking really bullish. SPX is breaking out of the trend. The whole market's getting exuberant again. You're going to see this come all the way back to 20, hold 20, and probably end up catching up to where it should be. You know, it's wrong at the minute. I'm not saying it's wrong because it's doing what it's doing, but this exacerbated move, it's creating a lot of fear, which makes people trade irrationally. And then I'm just saying that I think there's a very good buying opportunity coming. And even if you just play 14K, 14K is definitely a buy for me. If you just buy 14 with a stop loss, fine. You just buy 10 with a stop loss, fine. Buy 8.5 with a stop loss, fine. I think that is the best way to look at this. And then obviously just DCA with your cash if you sold out. So if you sold cash, you're technically short. But I'm saying the trade for me is the bounce trade. I'm not looking to actually put risk down on shorts because you already are short if you're in cash. I don't want to double down on that. So I think it's trading quite irrationally here. We don't know how fast it's going to go with all these foreclosures. We don't know what the next one is. You know, this could just be the beginning. If crypto.com goes down as well, it really is going to create some volatility. But let me just do your things for you, mate. Take over. I'll do your little things for you.
Yeah, I've been looking a little bit at the crypto.com thing. That's quite interesting. I don't want to talk too much about this, but I was actually publicly on my last live stream calling Bybit out because you guys know that I love Bybit. Been with them for so long, and I was like, look, you guys got to do something, you know, to like, you know, I want them to show that we can trust them. But I'm with you. I mean,
Group of reserve, you're saying.
Yeah.
Is that what you're saying?
𝗪𝗪𝗡𝗧 and all that. Yeah. Mate, I was pushing them on live. I called them out, and after the live, I was hammering them in the group chat and like, yo, like, give me something here. And they did. They gave me some really cool things. I don't know if you saw any letters. Did you see that? It was posted in the affiliates Telegram channel.
Yeah, I've seen a whole load of stuff coming out.
Yeah,
I'll give my point. I'll give what I think in a second, but let you speak.
Mm-hmm. Yeah, well, I haven't actually had a lot of time to look through it yet, but from the little that I did read, it looks good. Now, obviously, words don't mean a whole lot, so ultimately, I've been saying this for years. You know, only keep what you need to trade on exchanges, and for fuck's sakes, do not use exchanges as wallets. Like, I don't know how this still isn't like a mainstream idea yet, but obviously, you don't want to be. You don't want to be putting your money on exchanges and then just kind of hoping that everything's going to be fine indefinitely. You know, so ultimately, I think that's a big part of this. And then as for, you know, exchanges kind of sending money around for, you know, proof of reserves, you know, I mean,
like this stuff.
I was surprised for like 5 seconds when I saw that news from crypto.com, and then I thought about it a little bit more, and I'm like, actually, this makes a lot of sense if every
not being
fucking funds are
transparent,
just tied in.
They're not being transparent.
No,
They're not because he's saying all these things. It's all words, but I don't like it because he's done this thing where he's shown his assets, but he's not showing liabilities. And the problem is, Crypto.com hasn't shown yet. Yeah, can you see it? Is it all working? He hasn't shown yet that they haven't been using this CRO token as collateral to get loans. That's the problem. If they've used CRO to get loans and use it as collateral, if CRO goes to zero, those loans have to be repaid. And if they don't have assets to back that, guess what? You are literally insolvent. So it's really, really bad. And I just want to elaborate on your point you said a second ago about exchanges and people using crypto exchanges as wallets. Like, think about that. It comes down to people being lazy and also being scared, because crypto is a little bit like dodgy when you send a transaction. Like, even me today, being in crypto for so long, I still do test transactions. I still like multiple check it. I still make sure, because if you send the money, it's gone. It literally is like that button, and it's gone. So the problem is that people put money on exchanges and they just feel like, oh, I don't want to move it again, you know, and they get lazy and they're scared in a way. A lot of people.
That's not an excuse, though. I mean, this is
not
money.
an excuse.
I mean,
I'm not saying.
Yeah.
I'm not saying it's
no,
excuse.
I get. I'm not saying you are, but like the fact that I liken this to being a pilot, and you know what I say about. I mean, this is specifically for trading, but it applies to OPSEC as well. You know, like if you're the captain of a plane and you're gonna fly it somewhere, you're gonna check every single thing in this plane just to make sure that it's safe to fly, and you're not gonna be like, well, I'll check this and this, but not that, you know, today because I'm fucking lazy today or I don't want to. Like you'll do it because that's your job and you have no choice. You have to do it for safety. And you know, like if you treat your money differently, then you fucking deserve to lose it. Like, I mean, you're you're not respecting your money. And I think this is what it comes down to for a lot of people, you know, like especially if you look at here's the fireside chat shit. Like if you look at why people enter crypto, they're entering crypto or just trading in general to shortcut their way to wealth, right? So it is like almost like a lazy person's thing in the first place, right? Like you don't want to work you know, a job and like bank up your salaries, or you don't want to like build up a company and then sell it and get a big payout. You just want to click a few fucking buttons and make money, right? So it's inherently a more, you know, like a shortcut. Like that's why people get in. And you know, my argument is, okay, now you're here, stop looking for more shortcuts, do everything properly, and it will work out. But you know, if you're always just kind of looking to you know, like, yeah, you deposit money on your exchange once, and maybe you make a bunch of money and you just decide that you don't want to withdraw it because, you know, perhaps you haven't set up your hardware wallet yet, or your hardware wallet isn't secured in a particularly safe way. So, you know, you feel like this is bullshit. It's absolutely unacceptable. And my God, if it takes like an FTX hack for you to realize this, I don't know what to say. I mean, it's there's no justification for this.
The thing is with it, right? I like that, mate. I just fucking like the way you think. You think like me. If you lose, you have to fucking learn. And the problem is, if you're lazy and you don't treat your money like your business, like, you know, when you take a loss in trading, just look at it as a cost or an expense and say, look, this is my money at risk. Okay, I have to take this like a business. And the people who slack, the people who lose. And if you do lose and you get fucked up by FTX, guess what? Most people, and I did a tweet about this. Most people want freedom and they want very little regulation on things that they want. And this is not just crypto. Crypto is obviously specifically good at the minute. We want low regulation. But as soon as they get burnt because they're lazy, the first thing they do is run to the regulators with their tail behind their legs like a whimpering dog and ask for fucking regulation. And that is purely because they are basically lazy motherfuckers, and they're not men. They're not taking their losses like a man. I've taken losses like a man, okay? I have been fucked before. I've lost 250K in a trade before, and I didn't run away and say, oh, it should be regulated. You should not have let me use leverage. Don't let me use it. No. I fucking made mistakes at the beginning like everybody else, but the problem is that most people don't think like that. They're going to run to the regulators, and they're going to come and regulate exchanges. And I know exchanges is one thing, but and we know that crypto as a whole is very difficult to regulate the whole thing, but they're going to regulate exchanges. They're going to make it more difficult for corruption. So they're going to make it more difficult for competition to arise. There's going to be corruption because whenever government get in there, they're going to get paid off, and there's going to be problems. And I think that, you know, what you said there about people need to fucking learn their lessons and do it themselves is so true, dude. But no one's saying this. Let me get this thing for you, like you know,
nobody's saying this because it's difficult, right? Like, I mean, it requires every single, I mean, how many viewers have we got here? It requires however like 1,000 viewers that are live right now to actually put in some fucking work and set aside a Saturday and a Sunday to completely streamline their operational security and make it all safe. And like, yeah, it's a lot of work, and you're in fucking Bitcoin, like, you know, I mean, it's not supposed to be easy. That's the point. That's the whole point. Like, if Bitcoin was the only coin that existed, this FTX bullshit probably couldn't have happened. You know, like this happens because people are creating tokens and looking for shortcuts and just trying to like build up wealth with, you know, kind of shortcuts and stuff like that. That's not what Bitcoin was made for, and kind of the rest of crypto just, you know, piggybacked off it because opportunities.
I like crypto because the beauty of it, mate, and blockchain technology, like I said in this tweet. Everyone's like looking for regulation. It's like, we don't need regulation. The whole point of Bitcoin was to get the regulators out of the way and have no need for regulation because there's no middleman, right? So if we have a whole industry built on blockchain technology and we can see everything, we can see what the exchanges have in their wallets. If the community, the people, the marketplace, if we demand exchanges to be better, they have to do it because we can audit it, and the fucking underlying technology enforces integrity into them. So we don't need a government to go and tell us what we already know. We can do it ourselves. And I was in one of those Twitter lives or Twitter spaces, and Simon Dixon was just grilling in exchange in real time, like asking him all the difficult questions. And I'm thinking to myself, he's doing a better job than any regulator could ever do. 38,000 people listening, and he's grilling some exchange in real time. Why do we need to go through the government? We don't. Crypto is beautiful because the underlying technology is built on blockchain. And I said here, we don't need governments to regulate because they're always going to fuck us over, and eventually because they're going to get paid off and corrupted. We can regulate the industry ourselves. And I think like people are missing this right now. It's fucking worrying me because we're going to end up just back at BitLicense. You know, the FTX bill is going to go through as well anyway. So BitBoy fought and went at Sam Bankman-Fried for the FTX bill, which is the BIT license. And now the Senate is going to use the FTX license anyway. So we lost FTX, everyone gets wrecked, and the bill's coming in anyway. So it's absolute carnage out here, dude.
Tell me about the BIT license thing, because I hadn't heard of this. I know he was like paying for a bunch of shit, but I don't know the details.
Yes, I'm not going to pretend I'm an expert, but
okay,
it's similar to a license to be an accredited investor. So like if you want to be a big player in the stock market today, you have to go through a certain centralized entity. Okay, you have to be accredited, you have to go through a certain process. And it's actually changed a lot today because there's so many CFD exchanges. It's much more easy on-ramp for retail and stuff like that. But what Sam Bankman-Fried was trying to do with the government, he was almost like the proxy for the government to implement regulation to create a BIT license, which means everyone has to be licensed to be able to buy and sell Bitcoin, whether an exchange or an individual. But don't quote me on this. I'm not 100% expert. But the problem is that I think BitBoy saw that thing and was morally right to do what he did because he exposed it. But what's happened is now is that CZ's gone around and then sold all the FTT tokens, which has brought FTX to its knees. That's going to affect 130 companies. So it's going to be bad for business in crypto, not the trading, because the trading is probably going to go the other way. When everyone gets super scared, it's probably going to go up. But you know, COVID was bad, but it went up. So all that side, I'm talking about fundamentals here. There is a time and place for it. But like, C did that. FTX has gone to zero. But the problem is that the Senate are still going to do the FTX bill. So the BIT license is still going to be a thing, and they're still going to try and force it in. So the problem is that there's going to be more regulation to exchanges. And, I'm going through all this, but the solution is DEXs, mate. And I think, I'm on Bybit, I'm on BitGet, I'm on Femex, I have all these exchanges. We use them because they're good. Decentralized exchanges aren't good enough yet. Let's be real here. You can't use Ethereum on chain because it takes 2 minutes to do a transaction. You can't use BSC because it's a fucking ball ache and the liquidity pools are too small. So there's always a place for centralization, but this is now the catalyst, I think, for decentralized exchanges to really begin to get better. And I think it's similar to the analogy.
People will start caring.
But dude, you just nailed it. When you get hurt, you fucking start caring, or when you win, you start caring. So like, it's about forcing. Like everyone does everything at the last minute. The people who don't do things at the last minute are the ones who do well. That's how you get ahead. You don't do it at the last minute, but most people just do everything at the last minute. It's always the same.
And this is quite utopia, man. Like if people start like trading like on decentralized exchanges, even if it's derivatives or whatever, like that's better. That's moving in the right direction. That's what we're supposed to be doing, and it's better for everybody. Like yes, it's a little bit more work, and you lose the benefits of having a centralized exchange, but you're no longer vulnerable. It'll be your coins. It'll be your keys. You'll never have to worry about accountability, about bullshit like this. Yeah, exactly. I'm gonna come right back.
It forces integrity. So this is CRO right now. Yeah, it enforces people to be more responsible, which in the long run will make people better human beings. They'll even bring up their fucking kids better because they have more responsibility to their own shit. It's a good way. The thing is with crypto, I love crypto because there's a growth story to it. There isn't really a growth story to anything else. Everything's just a bit like depressing. But I think decentralized exchanges are the next big thing, and I'm even going to build my own DEX, and I'm just going to go for it because I think there's an opportunity to potentially change not just the world. Like you could change the world, but trading is going to be so different because of DEXs, man. I think we spoke about this on another video. Like the change AMMs bring, it means that you don't need centralized market makers or liquidity providers. Like centralized liquidity providers, market movers, market makers, that is a central point of failure in itself, because then you do rely on some individual to make the market, which actually and create the liquidity. And that can sometimes cause manipulation, which we already know. So imagine if you just get rid of all that shit and then it just turns into AMMs and dark pools and liquidity pools. Then what you're doing is you're indirectly making every participant, every individual liquidity provider is an individual person. So everyone is a micro market maker. So you're just decentralizing market makers the same way Bitcoin decentralizes banking. It's just really powerful. So like, I think decentralized exchanges and wallets are literally the next biggest thing for crypto. And this is just going to make it faster because similar to how COVID forced everyone to go online, it's the same thing.
Yeah, and I just want to add as well, I don't buy the narratives necessarily of, oh, we're so early and this, but I mean, I do believe it. I just don't like to echo it because I think it's kind of cringe. But in this case, I think we are kind of early, right? I mean, we've got a bunch of tech and things work, especially with the big ones like Bitcoin and Ethereum. Things work, but we still haven't had this push of like, let's do things decentralized. You know, like everything's like been, it was Mt. Gox before, and now it's whatever FTX, and there's going to be more in the future, and there was many more in the past as well in between. But you know, I think that this can really serve, and I honestly think it will. Not that it can, it certainly will serve as an awakening where we just kind of start caring about these things a little bit more, and then there's this, you know, new breath of life that comes in where there's more stability, because that's ultimately what decentralization gives you, is stability. There's more stability, you know, in
as well, yeah.
Absolutely, because I mean, the point of decentralization, just in case, you know, for viewers that haven't, you know, fully grasped this yet, is you know, if you've got a centralized entity that goes down, everybody gets affected. But if you've got a decentralized entity that goes down, which means one person, then one person gets fucked, but everyone else doesn't, and that one person only gets fucked most likely because they weren't, you know, being responsible enough with what they were doing. So it's very it's to say that if one node goes down, the rest of the, you know, thing can function, you know, independent of it, and so it's, I mean, that was exactly the point of Bitcoin in the first place.
Yeah, that's what you always come back to, don't you? That's what I always do.
Yeah.
I'm like, well, that was the fucking point of Bitcoin, you know?
Exactly, and I think that the fact that we're not there yet, like, this is great. I mean, you know, we're moving in that direction. This was gonna happen, man. Like it happened to, you know, it happened to take place in November 2022. But if it didn't happen this month, it would have happened in the future anyway. Like eventually, these things are gonna go down. You know, when they're centralized, and so the fact that we're not there yet, that's, you know, long term, that is one of the big, like, like I said, I don't buy into these bullish narratives generally, but this is one that I'm liking.
Man, I completely agree with you. I still think it's honestly ridiculously early. Like, I'm looking at infinite market cap, and I'm looking at Bitcoin. It's smaller than Samsung. It's just gone down another two ticks. I don't know if you can see this, guys. Let me get rid of this hide current thing. So you can see Bitcoin's at $320 billion. Okay. So MasterCard is 320 billion, okay? But MasterCard is just one company in the world. That's okay. It's a big company in the USA, but MasterCard isn't used in China or fucking, like, there's a whole nother world out there in Asia as well. So like MasterCard is bigger than Bitcoin. Everyone's like, no, Bitcoin, you're too late. It's like, what the fuck are you talking about? Like, what? It's just, you know, there's Apple. So for Bitcoin to eclipse the market cap of Apple, which is the biggest company in the world in terms of market cap, it's 2.3 trillion. It's like fucking almost 6x to get there. So it's ridiculous because Apple isn't money. Like, the reason you buy Apple is not to store it, to use it, to expend it in the future in discretion. Gold, the reason it has a big market cap is because when you buy it, you hold it. You know, when someone gives you money, you don't instantly try and spend it. You're like, oh, thanks for the money. I am now going to hold this money and spend it at my own discretion in the future. So you're storing the economic energy of your time or your work, whatever you did for someone. So Bitcoin is money and it can't be anything else. So, you know, I think it's still ridiculously early just for Bitcoin. These altcoins, some people are going to look back at these altcoins and be like, what? Like, they'll look at the chart and like right now it's this big like up and down chart, and they'll look back and they won't even be able to zoom in. It's going to be so difficult to get into that price action at the beginning. So like stuff like, you know, even Ethereum, because Ethereum's even smaller than Bitcoin. So I completely agree with you. I think the whole narrative of people thinking that it's too late is not true, because what people say does not correlate to the reality of things most of the time. You know, people say they're bullish. I'm really bullish. I'm really bullish. Actually, they're shorting. Oh, I'm not going to vote for Trump. I'm not going to vote for Trump. They voted for Trump. Oh, Bitcoin is too late. It's too late. Actually, it's smaller than Samsung. Like, guys, seriously, it's better than gold, and gold's money. So Bitcoin, like, money has to have a higher market cap than a stock, like, for its fundamental use case of storing value. You go in, you don't go out, kind of thing, right?
There's been a lot of talk about, you know, like, there's one person I met with. He's probably watching right now. So how you doing, bro? And he was saying, you know, he was just asking me, like, are we going to be okay? Is Bitcoin going to survive this? And I was like, what? And I said this right at the beginning when I jumped on, like, this was never a Bitcoin problem, you know, like this all this shit that's going on. It was it's exclusively a problem that affected other. I don't even know why Bitcoin dumped for this shit. Like, I mean, this never even affected Bitcoin.
It's irrational, yeah, exactly. It's irrational.
Yeah, Yeah, and I didn't even think about this until you said it, but this whole idea of like the market is wrong right now. I mean, it's quite a dangerous thing to say, but I do agree with it at this point in this market because I mean, if we didn't get this news that again doesn't affect Bitcoin, it's not like there was a 51% attack a few days ago and now everyone's selling Bitcoin. Like there was nothing that actually happened to put Bitcoin itself in a worse place. That to me, coupled with the fact that indices are still rising. I mean, it's a potentially.
That's why I said it. I'm not saying it's wrong. Like the market is the market. It's obviously the reality. But I'm saying because other markets are posturing bullish, like SPX is rising, DXY's going down, Dow Jones going up. I'm just saying it's basically not correlated. It's diverting away. There's a deviation happening. So what you usually find is like in traditional stocks and shares, say the industrial index is going down and SPX is going up. Usually one of them is kind of wrong and they usually come back to be in the middle. You can use that as a correlation. But what you're seeing now with crypto is that it's decoupling the opposite direction from SPX, even though we had a huge correlation. So one of them has been irrational. And I would say that it's more probable that Bitcoin is trading irrational, looking at the market environment with everything going on. People are obviously going to be freaked out by this kind of shit. So I just think that more people have hit the red button than the green button on Bitcoin than others, obviously. So I would say that I'm not saying it's a good trade right now because I'm purely technicals. I don't care about fundamentals. I'm purely technicals. If you look at the technicals, you're always going to beat the news anyway. And news isn't quantifiable. So FTX going bust might be positive for somebody else. How do you know what? There's actually no way. There's actually no proof ever in history that news was the reason for the price moving. There's no study or no survey. There's actually 100% no proof ever. It's never proven because it's just what people think happened because they say, oh, that news story happened, the price went down. There's no proof of that. You can't audit that. It's not quantifiable. You can't have an analysis. You can't have a statistic. Let's go and do a survey of the United States of America and say, did you buy or sell? No, it's not quantifiable. So like what I say is that you might as well just look at the charts first. It's the reality. And then you're usually going to get into the right position anyway. 90% of the time, you'll get into the right position anyway. Look at the chart. We broke 20. We retested it. We deviated it. And we went lower. You could have known nothing about fundamentals and still done that.
Well, that's what I was wondering is, like, let's say you were just like asleep for the last week and then you looked at Bitcoin's chart. I mean, it wouldn't even like point to a huge disaster. Like, I mean, it was a lower high, situation holding the same floor. And then let me throw my screen up.
I'll whip it up. You can see it on my So you're looking at this part here when we had 20.
Let me throw mine on so I can draw on this.
Yeah, go for it.
I can't do it.
Oh shit! I just did 20 years.
Yeah. So we had this. We had this. Fairly. I mean, this was the nightmare situation, really. But I mean, lower high situation, and then towards the end, we're just kind of consolidating at the bottom. And then if we really zoom out and look at this on the weekly time frame, we've taken a leg down. I mean, does this say huge FTX disaster? Where everyone's shitting their pants compared to this,
normal to me,
or this, or fucking this? Like, I'm sorry, but this doesn't look. Like, come on. You know what I mean? Like this isn't.
It's because the percent is quite high. Because when we dump from
well,
60,
let's put it on log then. Let's put it on log. It's still not that crazy. Like now we're putting things in perspective.
It's slightly more, but no, I'm agreeing with you. I'm agreeing with you, Sammy. I'm not. I know what you're saying. It's not that significant, but like people just look at the percent. That's the problem.
Yeah, and as they should, because that's a very important metric to gauge. But I mean, look. If you didn't see any of the news that happened, this is the kind of point I'm trying to make. Like, this is still just. I mean, technically, this move makes sense. I mean, we've been in a downtrend, and yeah, I mean, I was bullish too. I was in long positions. I was trading the long side, and fortunately, I made some profits before I got out. Stopped at break even and so on. But this is still. This is a good set. I wasn't stopped at break even actually. I closed in a profit, thankfully. But this is a pretty healthy. Normal kind of breakdown in the market overall. I mean, it's nothing like there's particularly, any malicious action going on. It's just a downtrend continuing to be a downtrend. Like it's nothing crazy.
Completely agree, mate. Honestly, I couldn't say it better myself. It's completely 100% fucking facts. I was on the long side as well. I got long from 19.4, got long from 19.5. I had my trading stops at $20,000. I got stopped out at 20K, and I knew that we're going to dump. I'm out. I'm not just out on stop. I'm out in cash as well. So I'm holding short. I'm technically, everyone's like, no, you're not short on an exchange. Well, no, if you sell cash, you're short, obviously. So like, I'm not really looking to trade. I already said from the beginning, if you lose 20, I'm sitting out. I'm taking, and then the FTX thing really kicked off, and that's kind of changed. I haven't done anything like this for a long time. So like the war thing made me worried. I was way more skeptical about the war thing than most people, and I might be paranoid, but it's a good thing to do, to be paranoid. So you actually think about the problems. But like I was getting money off exchanges through the whole Putin's war. We don't even know what that. Imagine if Putin does something right now for the markets. Like, for fuck's sake, crypto is going to be hilarious. But I'm saying I was moving off. I'm not really in a position to really trade. You know, I don't really have that much exposure on exchanges at the minute. I'm pretty much 90% off exchanges because I feel that that's a strategy in itself. You know, just to be like away, just to be like fuck this, just in case another collapse happens. Because I do think a lot of people are slowly, as there was more confidence, people were getting a little bit more on exchanges through the last few years. You know, do you remember back in 2019? It was like you would get like completely murked on social media for having any money on exchange. Like, no, not your keys, not your crypto. We're nerds. Stop it. Don't be ridiculous. You know, the 2019 bear market rally you can see there on your chart when we went from 3 to 14. I thought we could have got something like this. You know, if Dixie dumped, but you know, the market can do anything anytime. So you just have to have your levels. You know, bring it back to the basics. Technicals first. Lose 20. We're going a lot lower. Guess what? That's what we fucking got, Samuel, and that's what we're gonna get over and over again. It's just better to look at the better to look at the technicals and the fundamentals.
This rally was super interesting. It was like a mid-cycle fart,
bear market rally, yeah.
You know, and then yeah, and then kind of lost it all.
Because of COVID.
I don't know. You know, there's one thing, and one of the people in our comments, I don't know if it was my channel or yours. He says all this nonsense, people talking 8K is the same bullshit that was talked when Bitcoin was at 60K, and everyone talked about $100,000 Bitcoin. And I completely agree with that. I mean, like, yeah. And look, I'm not saying 8K is like definitely not happening, because ultimately, if we lose. You know, I mean, and I think this is, you know, really important way to visualize the market so that you keep your fucking sanity is, you know, like we lose a support level, we're probably going down to the next one, right? So it's fairly easy to say, you know, lose 14, you're probably coming down to like 11, lose that, you're coming down to like 9, 10. I mean, we're just going to drop down to the next support level, and it doesn't matter how many thousands of dollars or hundreds of dollars are between those support levels. We're probably just going to fall down to them. We might not, but we probably will, and we almost always do. You know, and so obviously 8K can happen, 3K can happen, any price level can happen, but you know, when we start leaning, you know, a little bit too far in one direction, I mean, man, the amount of times I've heard this is going to be a really long bear market, you know, and time to pack up and focus on enjoying life and then come back in 2-3 years, you know, or when the halving happens. Do you know what I mean? Like this sentiment that everybody's talking about now, you know, and like on a big red weekly candle, you know, like now we start talking about stuff like that. It's like people can't even imagine that a bounce can happen in the market anymore.
Bear market rally, you know, I think we're going to get one, yeah.
Of course.
I think we'll get one. I think we'll get one.
We have to get one.
Long to short ratio isn't great, though. Long to short isn't great. I don't like it.
No, I mean, these things need to be fixed. But if we do get a bear market rally, I mean, I wouldn't be surprised if we even kind of deviate above 25. We could go as high as 30, you know, really like 34, for example, and then come back down. Like, I mean, this would, you're telling me like this can't happen, and then you look at what happened in 2019. Like it's, in fact, let's actually take the ghost feed. Let's see what that would look like, because I'm curious now that I've said this.
Yeah, do a Fractal. I remember this pump really
where is it?
Well, because I remember I had a company at the time called Titan Investment, and I remember I had quite a lot of different clients. I had friends, family, and stuff like that. Kind of kept it to the family mostly, but I remember everybody they capitulated at 3K. I remember they were like, "You're an idiot. You were wrong." And I remember thinking, "Shit!" Like the setup here is suddenly the whole world is against it. The bear market rally is in motion, and the only friend of mine who stuck with me was one of my friends, landlord friend, and he stuck around. He was the only guy left. I had another guy called Nick as well. And literally, I had about 10, 15 people, everyone out. I had nothing to trade with. But it went from 3 to 14 in a matter of months. And that's why I'd say Bitcoin can flip. It's flippy. It's like the most flippy fucking thing in the world.
It's liquidity, right? I mean, you know, if nobody wants to sell and there's a few people clicking the buy button, like exactly what happened with this rally, you know, then the price is just going to go up. And by the way, now that we put this on this chart, I mean, man, doesn't this look so realistic? Like, really? I mean, isn't this
if you
like
do
exactly
the time frame? So this goes out to 2026. So scroll it back and make it so So just make it even more. No, go a little bit higher. Go a little bit. Yeah. So do that, and then to make it so it goes to 2024. I think that looks absolutely fine. Yeah.
Yeah.
Like, well, anything can look fine, but like I'm just saying, like people are getting so freaked out. You know, I could see that happening if we get above 20, hold 20. If SPX breaks trend and goes retest the highs. If SPX is going to go retest the highs, there's no problem with this at all.
And people are, you know, I mean, this FTX drama, I mean, it's not like this is going to still, okay, yeah, this could get worse, this contagion effect everyone's talking about where one goes down and then, you know, 5 more follow because they were, you know, too dependent on FTX or whatever. Sure, that can happen. You know, but ultimately, this isn't going to, you know, be weighing the market down forever. And you know, if as you were saying, if people are more open to risk, which, you know, you can see by, you know, judging things like the S&P 500, if they're starting to look a little bit more bullish, then that's telling you people want to speculate. You know, as soon as you start speculating in the safer places, you start feeling smart and greedy. Because you want to make more money, and when you feel greedy, you'll look at riskier things, right? It's the reason that after Bitcoin pumps, everyone looks to Ethereum, and after Ethereum pumps, everyone looks at the resident
trickle down.
shitcoins.
Yeah. Well, do you remember? Do you know do you know anything about Celsius? All right, you know the Celsius saga thing, yeah.
I was following it a little bit.
I was following it a little bit, okay, but my point is this: everyone forgot it in a week. You know, it happened. It went into foreclosure. Chapter 11 happened, and everyone's forgotten about Celsius. Now they're all in FTX. As soon as a few months go by, or maybe even a few weeks, it will just be forgotten. The people who got wrecked will be still watching videos about it, etc. But it's not going to be a thing which is going to hold down sentiment for that long. It really isn't. There's all the other companies can go bust. It's .com. It's just another flush. It is going to create a little bit of volatility, and it's going to have a little bit of a, you know, it's going to create some unforeseen headwinds. I understand this because of all the extra ties with it, but there's a lot of money being printed every fucking day, and there's still a lot of people who've never even got into crypto. So I'd just say to a lot of people, yeah, we can bumble around the bear market for a bit longer, but yeah, the bear market rally is not off the cards at all.
Of course not. It almost. Yeah,
I think the market is irrationally in the other direction.
Yeah.
Let's have a look at this question
in the chat. Steve Smith says FTX is bigger though. I don't think that's insurance against what I'm saying. You know, I mean, Mt. Gox happened, and yeah, okay, the market was much smaller overall, but that was a fucking lot of Bitcoin that went missing. You know,
yeah, but in ratio to the market size, it was a big deal. Yeah, exactly.
100%. Yeah, I mean that seemed like the end of crypto. A lot of people sold fully and just capitulated and thought they'd never come back. You know, so I don't think that it matters that FTX is bigger. I mean, you know, huge banks across the United States and Europe, you know, went bust in 08, 09 or whatever, and that, you know, I mean. Did the banking industry just, you know, did the banking industry just shut down? Like, no. I mean, you know, big players can die and a lot of people can get fucked, but that doesn't, you know, I mean, it doesn't really matter how big it is.
I agree. I think also a lot of people aren't thinking about this dynamic, okay? You know, and by the way, I am not selling any of my CRO, just to tell you that answer your question. But it's staked for the card. But think about this, okay? A lot of people aren't thinking about this dynamic where, you know, FTX had 10% of all the Solana tokens in circulating supply on their balance sheet. Okay, so, and also FTX have a lot of other assets. But think about this: those funds are not going to move for 2 years. There is no way in 2 years that any of that's going to move. Chapter 11 is the whole process. You're going to go through all these different fucking procedures, courts, going through who's going to get fucking auctioning off what. A lot of people, what they're not thinking about, especially with this as well. Let me show you my Twitter a second. Especially with the narrative of, I think $3 billion I did earlier. Yeah, $3 billion has left exchanges in the last 24 hours. So we have to think about this because everyone was talking about supply shocks a couple of months ago, okay? And we know when there's not much crypto on exchanges, we know that FTX has just gone bust, right? And all of those tokens aren't going to move. There's a lot of cryptocurrency off circulating supply, and it's 3 billion's come off today. So in the last 24 hours. So I think...
do we have any idea what % of total money on exchanges that is?
Well, we know that it's going to... Well, okay, look, I can give you this statistic. The volume statistics we know. okay, on leverage. That's all I really know in terms of what there is in gone on chain. But we know there's probably about $14 billion a day being traded on the whole market. Okay, so I can't really give you an idea of like what that is in terms of hodls, but like it's a lot of fucking money. It's like crypto.com's only 3 billion, 2.5 billion they have in their whole balance sheet in assets. So it's a lot. To get an actual number, I can't really do that. I don't know. But I would say that it's a lot of money.
Log on to Glassnode. I'll see if I
can have a little look. Yeah.
Don't share my screen right now because I'm logging in.
Yeah, don't worry. And I think that people aren't really thinking about that. There could be a scenario here where we do have a supply shock. And I do think that Bitcoin, I'll just do my charts for a bit while you're doing that. You know, SPX, I think it's going to go higher. You know, the Dow Jones has broken out of trend. This is very positive. Dixie's breaking down, very positive. I don't see Dixie stopping until at least 100 points. Bitcoin is, you know, irrationally gone the opposite direction because of all this kind of FUD. And I think that, yes, it can go to 14K. And just to like take off the analysis hat a second and just talk about strictly trading, I'm a buyer at 14. If we hold above 16.1, I'm looking to see if I can sell into resistance. And if we get a higher low, I'm looking to buy here and get to 20. Okay, that's my strategy. That's it. I'm a buyer at 14. I'm a seller at 18.6. That's what I'm thinking. If we suddenly go bang and hold 20, I'm a buyer again. 20 is my line in the sand. If we go to 14, it might be a little bit lower. But, you know, in strictly trading, you know, right now, the funny thing about trading is that everyone wants to join the conversation after the move to understand why it happened. Can you explain to me why it happened? But the reason I'm not looking to trade now is because I've already done my trading. I've already done my positions. You have to get in and out before the moves. No one makes any money getting in at the last. You've got to get in before the pack, not after the pack. So the problem is everyone's now looking at what happened, but the move has already happened, guys. We've lost the inflection point. You know, we had nice bounces off it. I was long from all the way down here, all the way up, bounce, bounce, bounce. You lose 20, you go a lot lower. And look how perfect it is, Sammy, just to, you know, so we can beat on our technical analysis drum and say it's the only way. You could have had no idea about any news. We had a break of $20,000. We retested it. We did 20, and then we had the move. So again, you just don't need. Yeah. That was such a great opportunity. I remember looking at that, thinking why, and then bang, just absolutely nuked off it. It was actually the reason this happened, and I would say that the most probable scenario for why this happened was because the SPX came out the gates on the open really, really aggressive to the upside, and it just created that sudden spike of, oh shit, we're doing it, and then that next candle was the saga, the FTX saga. So it was like this crazy volatility. All those things happened in such a weird time. And
Let me show you this Glassnode data. I think this is really interesting.
Go for it. Take control, brother.
So, have you used this before, by the way?
Yeah, I had an account for a bit, but I kind of ended up like really over datering myself. And I thought that I've already got my strategy. You know, I had my strategy. There was 8 things I found which I liked, but I kind of thought to myself, I'm only going to use it on long-term metrics anyway, and I've got the CBBI, so I kind of said I'm not going to bother. But
no, that's fair enough. Well, I just want to throw this out there for both of our channels right now. I paid $9,000 for this fucking shit. So, and nice, I'm with you. We need some likes for this. Like 9K. Every time I throw this up,
$9,000. What was it? $9,000 for a lifetime membership or per year?
And I think you can only get it for a year.
So you can't have it for longer than a year. You have to pay again.
I don't know about longer for it. I certainly wasn't going to pay more than 9. And anyway, so that's the first thing I'm going to say before I show you this.
If it costs $9,000, bro, you're sitting here for an hour.
Bro, we're talking about this. We need to squeeze out whatever this shit is worth,
bro. Like, why are we talking all this shit? Let's nerd out for a bit. Come on.
Yeah. So here's the thing. If we zoom out, let's just give some context for where we are. So this is Bitcoin exchange net position change. So this is the 30-day change of supply held in exchange wallet. So you would expect that this reflects, you know, the one-to-one reserves of whatever, you know, clients have in their accounts. And this, you know, when we start seeing it dipping red, you know, the first thing that would hopefully mean is, you know, people don't want to sell, right? So here's a good example. This is when Bitcoin was falling from, 60,000 back down to 30, we saw a huge change in exchange, in the money that was on exchanges. A lot of people were moving their funds onto exchanges. Big green histogram right here, and what do you I mean? This is happening like right as the dump is most intense, and pretty much right when it's over, because obviously most people are late. And then on the opposite side, when we're rallying up, people are kind of moving their money off exchanges, and we can see this continuing, right? When we start to jump, when we start to dump. When we start to dump down a little bit, we're seeing that green come right back in. A lot of people moving their money back on exchanges, and of course it peaks pretty much right when the market bottoms again. So everyone's always wrong about this. That's the first thing I want to say. It's not always the case, but generally it does tend to be like that.
Just reiterate again. So just because I was doing something. So the red is net outflow from exchanges. We're talking about, or position changes. This is a net
30-day change. 30-day change of supply. And this is similar. This is just exchange balance. So the total amount of coins held on exchange addresses. And again, you would expect this to reflect, what clients are having in their accounts. You never had to say this before, but now we have to make this clarification. And this is just generally interesting because this has been going down for a long time, but it has kind of dropped down. What I want to highlight right here is kind of right before this big dump happened, there were 2.377 million Bitcoins on exchanges. That's all exchanges, according to this. And that
a little,
about 10% of total supply. And that's dropped down to, as of 2 days ago, that's dropped down to 2.3 million. So it's dropped down by about 100,000 Bitcoins. Yeah.
That's a big change. What, in a day? Did you say a day? Did you say in...
That's in 4 days. In 4 days, 100,000 Bitcoins were removed. Yeah, and that's a fairly steep drop. Like, if we look at the kind of drops that we saw, there was another steep drop right here. That was 2.58 million down to 2.5 million. It's another 100,000 drop, and that happened within the space of about 2-3 days. So we do get... So there's two conclusions to draw from this. First of all, number one, from what I'm seeing, number one, this is a big drop. Number two, it's not a huge drop, because we've had drops like this previously. Like, I would have thought... By the way, this data needs to update, right? Things got progressively shit every single day, and this data is 2 days old. So I think that's the first thing to point out. Or it's 1 day old, because in my time zone it's 3 a.m. now. So it's basically just 1 day old, this data. So when we see this update, when we come back on this tomorrow, I'll make a video on this or something on my channel. So if you're subscribed, you're going to see that.
Just whack it up. Just click this from this video and be like, Stanley Lowell on-chain analysis. Let's go.
Yeah, this is great, and this is the thing, is like on-chain analysis is a whole other dimension of analysis that people don't even. I understand what you mean, like it becomes too much data, yes, but if you look at key metrics and you just kind of sprinkle it in and supplement the rest of your analysis.
Answer me this question. So with this information you have here about the outflow and inflow onto exchanges, what is the general status quo, or what's like the kind of, I know it would be good if you could backtest it, like what usually happens to price on a day where there's a big outflow, and what usually happens to price when there's a big inflow? Does the price have any kind of correlation between that? Because you can look at the backtested data.
So this is basically what I was discussing. Is this what you're talking about? Like when a lot of money is moving on So when a lot of money is moving,
is this positions on exchanges changing, or is this people putting
supply
crypto
held in exchange wallets?
Okay, so it means that when the supply is increased onto exchanges, usually is timing what? What's the kind of
that would imply that people want to trade, right? If money is being moved onto exchanges, that would imply that people want to trade. Whether they want to trade to the upside or downside isn't clear, but you can infer that from the chart, right? Yeah,
so green means it's coming on. Green is it's coming onto exchanges. Red is it's coming off. So as it's rising, it's coming off. As it's going down, it's going on.
That's right. Well, okay. Let me rephrase that so I understand. So this is when it's green. When this is going up, that means money is being moved onto exchanges. When it's red, that means money is moving off exchanges. So generally, people are going to move their money off exchanges when the price is going up. Black line is Bitcoin's price, if you haven't worked that out. So generally, people are going to be moving their money off exchanges when the price is going up because they're bullish. And I want to clarify these things because there might be like one or two people.
What's the black line? I don't know what the black line is. I'm a scrub. Help me.
I guarantee you one person didn't get it. and for that one person, I'm here for you, bro. And so yeah, this is great. This is great because this shows us a lot about what sentiment is doing here. And I think again, I mean, a lot of money moving off exchanges here. Obviously, I guess people kind of hoping for a little bit of a recovery, money moving onto exchanges here because this is kind of when the market is flatlining again down at 20k or even a little bit. This is like around 19k. Yeah, this is 18, 19k when Bitcoin was trading around there. So people probably thought the market was going to break down. We haven't seen money moving onto exchanges now. This is one of the times where the market is dumping down. This is conclusion number 3. This is one of the times where the market is moving down, but people aren't moving their money onto exchanges.
Yeah, because they're freaking out because of the whole crashes. Yeah,
exactly. It's very interesting. So
wait, that's an interesting dynamic though. So the price is going down, whilst usually when people take money off exchanges, it goes up. So you could say in analysis, I said before, that we could look for a supply shock because everyone's coming off exchanges. The price is going, it's doing the opposite of what it usually does. I actually mentioned this before in 2019 when we began a new expansion phase. Everyone was going off exchanges. I remember there was people talking about on Twitter saying the outflow, we're having a supply shock. There was that supply shock narrative going on. You can see it on the chart, all that red before the big run up, the expansion when we made the all-time highs from when we broke 20k.
Let me zoom out on this.
So I think actually this is kind of almost confluence to an idea I had before, like we were talking about. I said that I think the market might be a little bit wrong because we have $3 billion coming off exchanges. The price is still going down. Historically, if there's less money on exchanges, that means less supply. So if the demand goes up a little bit, there's less supply to be, what supply and demand, very simple equation. So there could be one of those crazy down and then up candles, and everyone just says, suddenly moves up. There's no exchange. Everyone's trying to get back onto exchanges to try and sell, but there's nothing. It's already beaten them to the race. This is hypothetical, but it is interesting to see that information.
I think it is, and one of the other things that I think is worth pointing out for this is the fact that money is being moved off exchanges, but the price is still dropping. To me, also means that that there is some aggressive selling going on because the money that is on exchanges still wants to sell. And but that supply shock thing I think is important. The other thing to throw in is the other thing to throw in is you can't. I mean, it takes how many minutes to send Bitcoin from a cold wallet to an exchange. It's not the craziest thing. I think one metric that is interesting to look at is what's going on with
this
our
full disclosure
addresses.
as well. I am buying Bitcoin. Just sort of cut you off. I am buying Bitcoin every single day at the moment because we are below $45,000. I said for the CBBI, if we lose 40k and go lower, I will be buying Bitcoin every day because I sold 400k worth of altcoins up there anyway.
Whoa, look
so I'm still buying Bitcoin every day.
Bitcoin addresses holding at least 10,000 coins. Look at how that spikes up right here.
Oh wow!
Look at that. That's recent.
Are we at all-time high?
Spiking up right now. No, I don't think so. Are we?
Is that
we might be.
Almost.
We might be. Yeah, all-time high was here. This was October 2018.
Wait. And money is leaving exchanges. So historically, when money goes on exchanges, you have more wallets because those wallets take up more of those coins on one wallet, right? So you got money coming off exchanges and the increase of supply of more having 10,000 in there. So this is called fucking net accumulation by whales, basically.
Well, actually, yeah, now that you've said exchanges, I don't know if this would be like people and family offices as opposed to, I mean, there's only 100.
No, but I'm saying that if you put money on exchange, it means that there's one wallet usually, which is
right
accounting for many accounts. You understand what I'm trying to say here? So there's if you have like say Coinbase's Bitcoin wallet, they have fucking so much on just one address. So I'm saying if it's on exchanges, usually that's showing more accounts. So that means that there's gonna be less wallets of 10,000 overall individual wallets. So you're seeing outflow of exchanges, increase of 10,000.
Well, that makes sense because if you remember the previous chart, right here, this is when Bitcoin. Let's zoom in a little bit. So right here was when there was a huge inflow onto exchanges, and that's where the number of addresses at more than 10k drops down to a low.
Yeah.
So that makes a lot of sense. So this is reflecting the same data that we just spoke about, but it's really interesting here because while everybody is scared, the biggest players seem to be
It's a divergence, and I don't know how it's going to play out. Let's just like rattle this off, and I'm really enjoying this data. But like, keep going, bro. But I'm saying, there's a divergence happening because of market irrationality. And like, I don't see the result of this being more down eventually. I see this being faster up. You know, that's what I'm kind of thinking here, because everything which is the last two metrics you pointed to is if money is going on exchanges, it's going down. If it's going up, it's going up. We're going down and off. So that's one divergence. That's against what's usually happened. Then we have more wallets of 10,000 Bitcoin on them, but Bitcoin is leaving exchanges. That's another divergence. That's different to what's ever happened in not ever, but usually. So I'm thinking it just plays into that card of it's a really good time to buy Bitcoin long term. That's definitely the case here. But I think there could be an interesting squeeze here on some level.
There's one chart I'm trying to bring up from my analyst. He showed me a really interesting chart of Bitcoin addresses holding between 10 to 100 Bitcoins. You might know the website. It's a totally different website. It's like a
I've got loads of stuff here. I'll go for a list. So I've got Coinalyze, I've got Glassnode, I've got wall charts, skew data. We've got Bitcoin Open Interest, Coinalyzer, Crypto Bubbles, Tensor Charts, Chase Miller Index. No. Oh yeah, Crypto Quant's quite good. You know, Crypto Quant like steal loads of information from Glassnode and give it free or something. I think it's called Crypto Quant. But you paid $9K for the year, so fuck them.
Yeah, I'm gonna use this a little bit. This is interesting. Accumulation balance. What is this?
Okay, Sammy, let me ask you a question. Yeah, I know that you're an absolute legend and you're the biggest nerd in the room, and that means you're a legend. So tell me, what is your favorite metric on this whole entire Glassnode thing? Because I remember I had like 4. I think one of mine was a net unrealized profit and loss. I think that was a really good one.
That's a very
because I was like, okay, if you look at it, when everyone's in profit, it's time the top is in, and I think that was one I looked at, which was quite good. But what would you say on this you like the most? And it could be any time frame.
So this is actually a similar. I don't know about my favorite one because you need different ones at different times. Probably the ones I go to the most will be this, which is basically just a slightly more evolved version of what you just described. It would be the money on exchanges, so the inflow and outflow, the histogram, the green red thing that we were talking about, and just looking at various different. One of the things that I think is really, it is very telling is if you look at the addresses with a balance of more than 0.1 BTC. Okay, this is showing quite the opposite right now. I think if we go to dollars, let's say, I don't know, let's go for the smaller one just for argument's sake. You'll generally, I haven't looked at the data yet, but you'll generally see, that this is going to be the opposite of what happens with the whales, so to speak, is when the small wallets are dropping in size, in quantity even, you'll tend to see the big wallets increasing in quantity. Yeah, it's not quite happening here. I think it's going to be. Yeah, no, it's not happening in this case, but generally you'll see that divergence. So I think it's different metrics at different times. This is an interesting one: percent of addresses and profit. This one's great to just show you kind of, especially with the green and red. We're entering the green now. That's good.
I think this was one of the ones I looked at. Yeah, I think it's similar, not the same. Yeah, I like these ones.
Is there a way to do log? Oh, this is log. Okay, my bad. Yeah, so this, I mean, this is kind of showing you generally when we kind of, fall into the green, we get a bounce. When we jump up into the red, we tend to get rejected. It's pretty accurate. It's, I mean, you don't want to use this in a bear market, but when you're, yeah. I mean, I'm sorry, in a bull market like this, it's not going to be particularly useful, but especially in bear markets, I mean, 2015, 14, this was just totally fucked. But, I mean, right now,
you're putting a divergence, aren't you? It's a divergence because the price is rising and the orange line is flatlining or decreasing. So you're seeing basically here that the price is going down, but the orange line is trying to begin to go up. So you're seeing again another divergence.
I mean, this will.
It's like that's the give or take whatever. But I'm saying like looking at what it looks like in history. I try and find that net unrealized P&L on exchanges. I think that's a really good one. I think it was like in one of the more like broader ones, which is like they could give out free.
Yep.
Maybe in like exchanges or derivatives or something. Profit and loss. Yeah, these look good.
Oh,
if we're like
realized.
Everyone's wrecked. You can see a big, nice, juicy red line there, sir. Make a bot. Yeah, we have many bots. That's what 60% of all trading is bots in crypto. Yeah, so this is quite interesting. So yeah, this is it with the blue. So the blue is like when everyone's in profit, the very, very top. And then obviously red is when everyone's fucked. And right now, you know, everyone's fucked. Like we're literally almost at the 3,200 lows. So it's a very,
let's just read this real quick so we know what we're looking at, especially for viewers, because I haven't seen this one before. Perfect. Net unrealized profit and loss is the difference between relative unrealized profit and relative unrealized loss. I don't understand this, mate. Can you break this down?
Yeah, so net unrealized, so it's like positions which haven't been closed out, are they in a profit or loss? And it says difference between relative unrealized profit and relative unrealized. So I think that's a way of just calculating the line relative to the chart. But I think like you know, I'm not an expert, but I say the go-to take on this is like it's showing you it when everyone is in profit. So like whenever everyone's making money, it could potentially be timing something. The blue is when everyone's making money at the very, very top, and the red is when everyone's in a unrealized. I haven't realized it yet, but everyone's in a loss. So that's how I can interpret that. But you can see here that
if you want to pause this and read, we can go through this if you want. But if you want to pause this and read, this is a more in-depth explanation of what Max is talking about.
Yeah, so I can't see anything. I can just see Glassnode right now.
Oh shit! 1 sec.
Yeah, I can't see anything right now. So if you click that link and then you change the tab, yeah, there you go.
Yeah, so I mean, I don't know if you want to go through it. I'm happy to go through this. I think it's a good thing to do.
Go.
I mean, depends how deep we want to go. Yeah, I mean,
I'll sit here and vape and listen to you talk about it. I'm up for it.
Well, let me read this out. The thing about Glassnode is this is hard for me to do live because this is so fucking complicated. But let me just read this out and let's roll with it. So, all right. Understanding the state of the Bitcoin blockchain with respect to the price at which Bitcoin is being valued by the market is indispensable, very important for any investor in this new asset. Bitcoin on-chain data has been used in conjunction with off-chain market data in order to create metrics and indicators that help investors gain fundamental insights into the current state. They could just write normally, but they choose to write in this fucking like university-educated way. Understand investor sentiment or model the value of Bitcoin. Okay. These metrics have in common that they make use of Bitcoin's underlying UTXO structure by comparing the value of Bitcoin at 2 different points in time. The current price and the price at the time a UTXO, so this is transaction, was created. So we're looking at the difference between the current price of Bitcoin and the price of Bitcoin at the time that a Bitcoin was moved. So for example, the current price of Bitcoin right now is 16.3. If I sent Max 1 Bitcoin a week ago, the UTXO price at that point would be 21,000. So we're comparing that, and that's how we get the realized price. So that's are we following? If we're not, let me know in the comments now, and I'll expand.
Well, someone wrote in the comments, when is the next drunk stream? So they're following, brother.
Yeah. I'm sober until early December, but early December comes, mate. I'm ready for a drink. Also, someone asked, did I sell my Ferrari?
Yeah. You sold your Ferrari?
No, I would never sell my Ferrari. In fact, I bought a Range Rover and it's been wrapped blue, and I really want to throw this on screen just to show you guys because I'm so proud of it. Anyway, we'll do this later.
No, go for it, dude. Mate, I'm saying this.
Yeah, fuck it.
I'm not going to drink till Christmas, and then we'll do a stupid drunk Christmas celebration and get some people on a stream.
I'm down for that, mate. Let's do it.
Yes, that was an epic stream, lol. Yeah, well, it's so funny. My CTO always messages me after I do a drunk stream. It's like, we lost 2.6% of our customers today. And I'm like, look, dude, I reckon it's worth it, you know? Only 2.6 crash. Like, fuck it. If I just do 10 and we're at 20% loss, make it all back in the fucking bull market. I say this, I drink in the bull market and I work in the bear market. I work in bear market, I drink in bull markets. That's how I work.
It's the way it should be, man. Yeah.
Everyone does the opposite. They're like, no, I want to drink in the bear market because I'm sad. No. Drink because you're happy. Sad. Don't drink because you're sad. Okay, that's how you should do it.
Bam. So
you got the rangy wrapped up blue, brother.
It's been wrapped. And by the way, this is the first time it's ever being shown online. Like I haven't posted this anywhere. It's not
is that
on
the same
Instagram,
one from LA, or
yes, it is.
Oh
No,
shit,
well,
son.
so this is the thing is I was renting this car in Los Angeles for like 2 months straight this year, and I just fell in love with it. So I got it out here in Dubai, and yeah, this is
They're,
hot.
they're
This
not
is
cheap
really
cars,
cool.
man. They're like
Mate,
100K,
this
aren't
this
they?
is the most expensive car I own. This Range
Really?
Rover costs more than the Ferrari next to it. It's fucking stupid.
Are you kidding me, man? That's mad.
It's so
actually
stupid.
I looked at one of the Range Rovers on Auto, whatever it is, in the Dubai to look at like leasing, and I was like, whoa, like the fucking range is like I think 8K a month, and the Ferrari was like 6.
8K is a good price. I mean, compared to what they got.
Maybe I don't know which model, but I was quite surprised that a Range Rover was that high. I saw a Rolls Royce for 20 a month, and I was like, you know what? Fuck it. Take a fucking Phantom for a month. Like what? Like that's pretty sick. You can get Rollsies out there 20K a month.
Are we talking pounds, US?
Oh shit. I think it was in dollars, or maybe it was in fucking AED. I don't know if it was in AED. If it was in AED, I wasn't looking.
When you want a rental out here, let me know. I'm gonna get you better prices because 20 is too high. But
okay, maybe it was AED.
But yeah,
then.
no, that's.
Let me check right now.
I mean, in AED, you're probably looking at more like 60,000. It depends. It depends. And I'm gonna go back to the on-chain a little bit, but I'm a car guy, so now that we're here,
I'm just gonna look at these fucking car prices.
But yeah, this was actually forest green. Let me show you how it looked before. It was actually really cute. It was nearly like British racing green. It was really nice.
No, mate. Yeah, it was a Rolls Royce, 630 a day here. One sec, model year.
630 what?
Let's have a look at Rolls Royce then. If I can find the fucking Rolls Royce, there we go. Yep, search that, please. Yeah, so we're looking at 19,000. So you can get a Rolls Royce Dawn 2017, 19,000 USD a month. This one here is a Rolls Royce Cullinan Black Badge 2020. No, sorry, 2022, 38,000 a month. We've got a Rolls Royce Wrath, sorry, 12,000 a month. So yeah,
this is stupid money. Yeah, and that's the thing is like originally I just wanted to rent this car, and I was like renting this car would have costed me like $15,000 a month, and I'm like that's like nearly a Bitcoin every month. I'm not fucking doing that. So
let me
I just decided to buy the cunt instead.
Let me show you these fuckers cars. So this one here, look, 38,000 a month, and I'm not gonna lie, that one looks fucking shit, mate. It looks like a freaking looks like one of those big Mercs you get. That looks shit. Never get that.
Yeah.
If I was gonna get something, I get a blacked out
for shit like this.
To be honest, mate, like that for 8, like it looks alright. Actually, no,
that's per week though.
Oh yeah, shit.
Yeah.
Okay, let me find.
They're expensive. They're very expensive. All right, while you're finding this
one here,
that's
the one I was gonna get. That's the one I was gonna get. That looks sick as fuck.
That's a man. That interior. Do you like the interior?
It's horrible interior, but I don't like. All I'm gonna be doing is just burning around, whipping up 𝐄𝐗𝐂𝐇s. So here we go.
Okay, fair enough. All right, let's go back to the analysis. I feel bad, at least for a little bit, and we'll come back to this. So yeah, I want to recap this. This is a very, very important point, and I think it's hard to understand. What we're looking at here is the difference between the current price of Bitcoin and the price of Bitcoin at the time that a Bitcoin has moved. And that's what we're talking about in terms of the realized price. So the idea here is that a Bitcoin is purchased and then it's moved, and that's the realized price. So here we make use of the same underlying concept in order to answer a fundamental question. If all Bitcoins were sold today, how much would investors stand to gain or lose? And we can calculate this by looking at when the Bitcoins were purchased, right? So if we say if we say on average all Bitcoins that were bought in the month of October were bought at a price of $20,000, and we look at what it is right now, then the difference would be about $3,500. To put it differently, how much of Bitcoin's circulating supply is at any given point in time in a profit or loss, and to what extent? So this, again, it's a barometer of how much pain or happiness there is in the market. Barometer is probably the wrong word. All right. The ability to access this... Cool. Thank you. The ability to access this information is important to investors with regard to Bitcoin's primary narrative, to act as digital, permissionless, censorship-resistant store of value. To answer these questions, we take 3 different approaches and define new sets of metrics, each adding an additional layer of detail. The number of current UTXOs that are in a profit and loss, so that should be quite easy to understand after what I've just said. The current supply of Bitcoin that is in a profit and loss. So a Bitcoin is in profit or a loss if the current price is higher or lower than the price that the Bitcoin has moved, right? So if the current price of Bitcoin, say I sent this Bitcoin to max at 21K, if the current price of Bitcoin is now at 25K, then that supply of one Bitcoin is in a profit at that time. So currently almost all Bitcoins that were, moved in the last basically 2 years nearly are going to be in a loss right now. Just because we're at nearly a 2-year low. And then number 3, the unrealized profit and loss of the current Bitcoin supply. So the profit or loss of a Bitcoin is calculated by taking the difference between the current price and the price at the time the last Bitcoin was moved. I think that's fairly easy to understand. Do we need to clarify that?
You're going into like the real nitty gritty of understanding the actual how it goes, but for me it's more about just the confluence on the chart of the lines. Do you know what I mean? Like I feel going into all the ins and outs is all good, but
this is going to take ages.
Like inverted yield curves and shit. It's like fuck off. Like show me the line and does it correlate with other lines? That's all we look at as technical analysis.
Okay. For the people that want to read this, I'm just going to scroll slowly. Pause the video wherever you want to read this. We're not going to go through the rest of this. This is going to take like 30 minutes, maybe more. So I don't think this is worth talking about right now. Yeah, but this is great. Yeah. So that's the whole thing. You can pause it at your leisure. Here's the chart, and yeah, the
interesting thing I take from this chart is that we never ever got into the blue net realized profit on the last bull market high. So when we went to 69, we never got there. And we had a divergence, though, a very interesting divergence. We had a higher price point with a lower indicator point, with the green. But I would say that every single previous bull market, you can see we had this little tick of blue at the very top. You can see it if you put your mouse cursor on it. So up the very top, I think it was over 75% of all wallets in profit. These ones as well. But you can see how we didn't get there on the last bull market. So what I'm thinking is we probably won't get down to lows. So you can see that actually the lows, we probably won't get down to those significant lows. And every single one, it's been rising. So if you draw a trend line from the lows, highs, actually see it's making a pennant. If you have 2 lines, you can't do it on this chart, but it's slightly downgrading on the top line. The whole thing's kind of going in. You what you'd probably say is actually that we are, from historical data, we're probably a little bit over exacerbated to the downside than we should be, because we never got overbought. This is not overbought, but we never, on this specific indicator or this specific metric, we never really got up to the top side, but we are getting down to the very, very low end now. So
I think the reason a lot of people, and I'm not saying this is the case, but I think it's worth discussing, the reason a lot of people would say that this is kind of potentially a little bit too far to the downside now is because, we're in a cycle of rate hiking and so on. I mean, it's just an environment that Bitcoin hasn't lived through before. What do you think about that?
Yeah, I think it's a really good point. Bitcoin was incepted in 2008, 2009, and I'll show you on the markets, right? So I'll quickly just whip on this. You can see SPX has only gone up since 2008, 2009. So you can see here, this was the bear market lows. The SPX has only risen. And quantitative easing was bad, but it only got really bad around here, which kind of created the parabola. Everyone trying to front run inflation. So Bitcoin was incepted here, okay? This is how traditional markets have performed since then, 600% up. So Bitcoin is interesting because it's never been in a long-term bear market scenario for equities and traditional markets. And we know the correlation is quite acute or quite similar at some levels, okay? And there's 2 ways I look at this. If SPX does, we're having a good day, so we're having some good months here. If SPX does come up and break out, we get a low high, and then we have a big snap, and we actually lose. We lose these levels. And this actually happens, and we do something like a 60% correction, which would be a golden retracement of, let me get it up for you, get my fibs up for you, leggies. We'd probably go down to around here, lows of the COVID crash. We could come all the way down here, do a 60% correction. That's absolutely fine. For a proper bear market, that'd be all good, 58%-ish. And if we did something like that,
decent, yeah.
Yeah, it comes up to it quite nicely.
Bad, really, March 2020. Like, I don't know. I'm not scared.
Not bad at all. Not bad at all. I would say that was probably the far, like that's how far it will go. This did come to the lows again, but I would say that if we did, the thing is that I look at as well. I'm looking at the other fiat currencies, but I'll go into that in a second because I think that could have a play. Because I think other fiat currencies are flooding into Dixie and this more, so it's kind of propping it a bit. But if we do have a significant bear market like we have previously, and we had the COVID one as well, you know, we don't know how Bitcoin's going to react. All I can say is this, okay? If we do get that and SPX really plummets, there's two ways I'm thinking about it. Bitcoin goes even lower and we really have a prolonged bear market with SPX. All I'm thinking is, though, is this. The reason that I left trading traditional shit back here in 2000, and I got in around 2016, so let's get about here. The reason people turned to crypto was because SPX was going down. And SPX was going down, but crypto went to the moon. This is before any of this happened, okay? So if SPX does have a significant crash and then there's a huge loss of faith in traditional, because Bitcoin's already done its shit and it gets so asymmetric again, we could see the time where Bitcoin has obviously the net kind of fear and it goes down. It's going to go down with it. Even if the stock market crashes, even gold will go down. Everything will go down. The Dixie will go back up, okay? Everything will go Dixie. And fiat currencies as well could even go. So Dixie could really do crazy stuff to the upside. But then we have an environment where maybe Bitcoin could then, because it's such a good, crazy asymmetric trade, Bitcoin could start doing some crazy percent gains. And then you just see all the motherfuckers, all the Forex guys, all the FX, all the traditional dudes doing stocks, shares, equities, indices. They could just say, you know what? We've had it now. Let's jump into crypto. And then we could see potentially crypto begin to decouple away from equity, because it is going to happen it's going to happen in the future at some point. It will happen. You know, SPX can do different shit to completely other asset classes. You know, biometric stocks and weed stocks can do different shit to the indice market. So like, we know it will decouple at some point, but I think it's an interesting question you bring up, because nobody really knows how it will be affected if we do get a significant pullback in this. But then we have to remember QE, there's a few other things going on, and like, you know, they might stop rate hiking, they might stop printing again. And, you know, this could just be, you know, if we look back at it, you know, this could just happen like that. And then we go into the next parabola, you know, that's still a parabola. You know, SPX could still do that and absolutely moon. And then that's going to be good for Bitcoin. So I'm just looking at.
What do you think about a more extended kind of, you know, I mean, this is assuming, like, see what happens between, can you zoom into like the 2000s, like between 2000 and 2010?
Here?
Yeah, this
whole,
yeah. This just sideways shit, basically.
It was I kind of remember 2008. You know, it was quite cool because, you know, everyone got so fucking scared around here and here. But actually it was quite a nice market because it managed to make its all-time highs within about 4 years. So it was still nice, because obviously if you sell and you buy, then you know, trading's okay. But this is obviously stagnating sideways for decades, you know. But it's because of QE, and the thing is, I would say that this is because dollars. Okay, there are more dollars in circulating supply bidding on the same amount of stock generally. Okay, that's what we're seeing here. You know, when you see consumer prices rise, it's because there is just more trickle down dollars. And if you don't increase the amount of services you create in an economy at the same rate of inflation, it means you have more dollars bidding for the same amount of goods and services. So that means companies have to raise their prices because the dollar's devalued, and it means that they can't buy things to create the products at the same purchasing power or price. Okay, that's the fundamentals of it, okay? But here we didn't have this crazy quantitative easing we have today. And also we had very, very high interest rates. So actually this is in the 70s and 80s up here. Market was rallying. We had the 2000 crash. That was just because of all of the interest and quantitative. They didn't even call it quantitative easing then. That was just overspending. But interest rates were high enough to like keep the market kind of flat, and it just shows that there was a bit more stability. Because the market doesn't have to. Why does the market carry on going up? Like it doesn't make any sense really for a logical standpoint. Because like, are companies just getting more and more and more better and valuable? No, they're just going up in price because there's more dollars. So there might be, I don't think we're ever going down here again, because the amount of dollars in circulating supply here is not the same as here, okay? So I don't think we ever go there again. The market only goes up because there's more dollars, generally. Doesn't mean we can't go down, but I would say that probably what we see here, if we get a similar scenario, will be like this, okay? That will be, we won't go lower than here, I don't think. It can happen, I don't think it is. And if we get that for 10 years, we probably get this for 10 years, okay? Where same kind of thing, where it zigzag, back to the highs, back down again, and then we actually continue.
You think Bitcoin can meaningfully decouple if that happens, and then
exactly. That's what I'm trying to say. That's my point. I'm saying that if SPX does really take a beating, but Bitcoin's already took so much of beating, it's done. You know, it's already thrown in the towel. The white flag. The white towel's already gone in. I think you could see a lot of people exiting out of SPX into Bitcoin, which then could result in a decoupling. because everyone's freaking out about SPX. Where are we going to go? Okay, dollar. Okay, but what happens if the dollar's like, having some headwinds because of inflation? Then we could see Bitcoin getting out of that. But it's very, very difficult to predict that. I always say it's much more easy to predict the direction and the velocity. That's what I found in years of trading. I can do the direction stuff. I never really know how far things are going to shoot. I don't think anybody does. Like, it's just so difficult to be able to know in one brain the decisions of millions of people in an emotional time. It's just like, maybe Albert Einstein could have done it, but it's just so difficult to do that. But we do live in a crazy time. The stock market going up doesn't represent the economy either. So that's completely done over years. I've spoken about this to you many times, Sammy, about that whole dynamic. Everyone's like, oh, the stock market's about the economy. Well, the economy was off here, legends. So how does that work? The stock market went up, the economy was off, and it went up. So
ever since that conversation, you changed my perspective on trading. You I mean, you can say it if you remember. You were talking about how like they rise in anticipation of it switching back on. That was a fucking light bulb moment for me.
Well, markets live in the future; they don't live in the past. So, you have COVID, you have this huge fiscal and monetary policy from governments, and the reason it was going up wasn't because more people were interested in getting into stock and the value of companies were going up. People were just trying to front run the anticipation of future inflation. That's what people were trying to do.
What does that say about right now? Like, people sold Bitcoin in anticipation of other exchanges getting fucked, right? Like that's basically what happened here. It hasn't actually happened yet. It might not happen. Yeah, it's all that's all we're seeing here. I mean, again, when you look at it that way, like, fuck. I mean, I don't even like the sentiment because it's so basic. But we're just looking at cheap bitcoins here, guys. Like, fuck.
No, but I mean, that's how it all is. That's I don't ever use the word expensive or cheap. That's what I just don't use those words because everything's relative in terms of where the price is at. Things can still go 50% down, 50% down. So I never look at cheap or expensive. What I try and look at is price relative to the past, and then purchasing power. Because what most people do is they get confused about the difference between price and purchasing power. I won't dive into that because it will take me too long. But the ultimate goal is this, like the kind of skim over it. If you have the same amount of circulating supply money in an economy, say $1 million is in the economy, and there's something which costs $1, if suddenly tomorrow there's $2 million in the economy, it's economically impossible for the product to still cost $1 because it means that there's more dollars bidding for the same thing, and it means that the devaluation of that circulating supply money, whatever it is, like dollars in this example, it means that the company's going to have to expend at a higher price, so they have to rise their prices. So let me make this example. So, okay, I didn't even do it properly. $1 million, something costs $1. If there's $2 million in the economy and then the thing costs $2, that is not an increase in value. That's just an increase in price because the purchasing power of the dollars went down. So the person who's selling it for now $2 is still getting the same amount of purchasing power for their product. So the price went up, the value didn't go up. If you have a scenario where there's $1 million in the economy and something costs $1, but there's still $1 million in the economy, and then the market decides that they're going to start spending $2 on it, that means there's an increase in price and value because it means that the dollars they're getting more purchasing power from those dollars. Do you understand? Does that make sense? I'm trying to make this really simple, but I can talk about this for a long time. It just means that you're taking more purchasing power from the economy. So the thing is, what I always say is, like, housing going up, on paper, your house is priced at a higher level right now. But actually, if you do that inflation adjusted, the value of a house actually isn't any higher than 2008. So a lot of people don't understand this, but most house prices, the value of houses right now is 2008 still. It's not, because the price doesn't mean anything. There's more dollars bidding for homes.
Yeah.
So
I always feel like the fucking killjoy of the party when I point that out. I'm like, people are like, well, I made 10% on my house. I'm like, okay, what was the inflation rate in that time?
Yeah, but you can do that one as well. But the great thing about Bitcoin is that it's been increasing in value and price, because if something is, okay, let me make it completely simple. If something increases in value, it means it's inflation. Very simply put. All you're trying to do in investing is buy things that appreciate faster than inflation. Because if you buy something that appreciates at the same rate as inflation, you're not getting any more value. Your numbers are going up because your costs go up. Everything around it goes up. So you need to beat inflation. Bitcoin obviously is beating inflation very, very well because it went up from fucking COVID to, this is a 1,700% gain. Inflation, they lie about it, but it's probably been 14, 50%, 16% at max, I'd say probably. So Bitcoin's way done it. Even Bitcoin going to where it is now, like even 3 to this, it is still 320%. So you still beat inflation since COVID, but housing has definitely not done that. Housing's gone down 20%. But
I need to
20% from a much
approaching
lower
4
high.
a.m. We're approaching 4 a.m. I've got some meetings tomorrow. I've got it's fucking today now. I've got to make a move.
For me, it's 1:49. So I'm still here, brother.
You still rocking?
But we might as well wrap it up. Do one thing's on your mind right now, Sammy, and just finish it all off.
Say that again.
Say one thing at the end of the video, bro. Are you gonna stay for long, or you want to go?
I really need to go. I'm supposed to be up at 11.
Shit.
I mean, shit. The only thing I want to round this off with, other than let me get the screen.
I'm gonna see if Dallas, because I've actually got another person coming in. Dallas might come in a minute.
Oh,
Let me see where he is.
Nice. Yeah, mate. Make this a big one.
I'm just gonna sit here like, well, if Dallas doesn't message me in the next 30 minutes, I'll just quit. But like, I'll just stick around for a bit.
Yeah, fair enough. Throw the screenshot over. If there's there's two things I want to say. First of all, Bybit's doing a ridiculously big bonus of 30k. I'm sure this applies to you as well, Max. Where you can deposit. I mean, it's a stupid amount of money. You have to deposit $250,000 and trade, but getting $30,000 as a bonus. 30k is 30k at the end of the day. That's like 2 Bitcoins right now. So that's really cool. Check it out. Link in the description. Check it out near the like button. Subscribe if you haven't already. All that stuff. You guys know the plugs, but guys, aside from all of that, let's get the camera blown up. One more thing that I want to touch on. Max, can you throw up the? Oh, you can't hear me anymore. One more thing that I want to touch on is again this not your keys, not your coins thing. There's no there's no excuse. There's no reason to not be taking custody of your funds. Fuck me if you haven't done so already. I don't know what you're thinking. You're absolutely crazy. You're just totally irresponsible. There's no other word for it. So please treat your money with some respect and do the hard thing and keep your money safe. If you look around at other people that things like this come and go, FTX collapse, Bitcoin, whatever, hacks, this, but you look at the people that kind of stay quite mentally stable. These are the people that did the prep work. You do this once, you refresh it. I mean, you follow good, security practices. You just don't put all your eggs in one basket, guys. These are basics that I think we have to all be doing. And if something like this doesn't kind of spring you into action, I don't know what will. Honestly, I don't. And I'm. How are you commenting from my channel, mate?
Oh yeah, that looks really weird. It says MDX Crypto and Sammy Loyal when I'm doing comments.
Yeah. Anyway, that's my piece. Obviously, I'm very passionate about this. I've been saying it for years. Don't fucking use exchanges as wallets. Only keep a functional amount of money on there if you're going to use exchanges. And store your funds safely. This is Bitcoin, not your bank. Nobody's going to come and save you. There is no insurance policy. If it goes wrong, it goes wrong, and that's the end of it. So, and if for some reason we're at the end of 2022 and you don't know this yet, then you need to take 50 steps back and study what Bitcoin is about. You need to understand it from a philosophical and technological standpoint. And any amount of trading and speculative interest you can do in this space is worth nothing if eventually your coins can be taken away from you because of other people's mistakes or your mistakes. So that's me. I'm gonna sign off here, and I'll see you all.
I've got you muted, Dallas, but yeah. Good. Sammy, bro, good to fucking see you, man. Really good conversations, insane insights. I'm going to be clipping that stuff about the on-chain data and using that as my content. I'm going to steal your absolute genius and use it to promote myself. But yeah, man, see you soon, brother. And we've got Dallas Bird in the building. I'll mute him in a second, but see you later, dude.
Dallas, hopefully we can chat next time. See you guys. Bye.
Dallas, my man, I got you in. What's up, brother?
What's up, man? Hopefully the back